Last year, my real estate portfolio generated $404,304 in rental income. That worked out $1,107 per day by working just 1 hour per week. Today I'm breaking down exactly how it works, the numbers behind it, and the boring strategy that made it happen. This isn't Airbnb, not even flipping houses, and it's definitely not a get-rich-quick scheme. Let's talk about my portfolio. Right now I own 22 single-family rental homes worth of $5 million in different states of Alabama, Tennessee, Nebraska, and Ohio. These are not luxury homes. They are working class single family rentals in cash flowing market. My goal was not join the appreciation hype. My goal was to build a portfolio which generates cash month over month. Let's talk about the biggest misconception in rental investment. You see, most of the beginner investor think you make money in real estate when you sell the property. But that couldn't be further from the truth. Real wealth is built when you hold. Tenants pays down the debt, rent increases over time, inflation erodes fixed mortgages, and cash flow stabilizes your life. In this scenario, selling is optional. By the way, if you want my help to acquiring your first rental property, I teach all the steps in my Entrepreneurship Mastermind program to build diversified income in just 3 months. Check the link in the description below. Let's talk about how I made $404,304 last year. What was the exact breakdown? The portfolio generated almost $33,700 per month last year. And no, this is not the actual profit. This is the gross rent before all the expenses. And I am happy to be transparent about all the expenses, what it looked like last year. Some of you might think $404,000 was my net profit. That's not the case. There is a lot of expenses involved. Let's talk about those one by one. I don't manage my real estate portfolio. My portfolio is managed by the professional property management company. I paid almost $26,000 to the property management company to manage my 22 unit portfolio last year. For regular maintenance and repair, I paid almost $20,000. For property taxes, I paid $46,000. For home insurance, I paid close to $30,000. And for capital expenditure like roof, HVAC, I paid around $26,000. After all of that, my real estate investment still works because the math was right from actually day one. My yearly expenses, including the mortgage payment, total was $298,000. That comes down to my net income, $105,000 per year, completely passive without managing any of the properties. Let's talk about my rental investment strategy, buy and hold. And I will try to explain it in very simple terms. And you might be wondering how you can copy my strategy. Well, my buy and hold strategy is a lot simpler than you think. Here is my exact 5 steps to make buy and hold strategy work. Step number 1, buy below replacement cost. When I want to buy a rental investment property, I always try to buy below replacement cost. What does it mean? It costs less or cheaper than building the new construction houses in the same neighborhood. Typically, I calculate the replacement cost by the average square feet cost in the neighborhood multiplied by the size of the house. Step number 2, I always buy property in the landlord-friendly states. In landlord-friendly states, the rental agreement favors the landlord, not the tenant. You might ask, what are the landlord-friendly states in the USA? I can tell you 5 of them: Texas, Florida, Arizona, Alabama, and Indiana. So why these are called landlord-friendly states? Because if the tenant doesn't pay the rent on time, you can evict the tenant in 3 to 7 day notices. If you are investing in tenant-friendly states, sometimes it's really hard to evict a tenant after 12 to 18 months and you are not collecting any rent in those months. Step number 3, I try to buy investment property where rent to price ratios are higher. What it means, the rent to price ratio needs to be at least 1%. So if you are buying $100,000 purchase price property, the rent needs to be at least $1,000 per month. In some of the states like New York, California, in Washington, it's really hard to find this type of properties. My first rental property which I bought in Washington, I paid $570,000. Using 1% rule, the rent needs to be $5,700, but I only received rent $2,200. So those are not good price to rent ratio. Step number 4, use long-term fixed rate debt. For the buy and hold strategy to work, you need to get long-term financing. And the interesting part is that you don't want to get a loan where the mortgage payment increases over time. For my own portfolio, I always get 30 years fixed rate mortgage, conventional loan, or DSCR, which translate to debt service coverage ratio loan. Both of these two loan terms, the monthly payment doesn't change over the next 30 years. I don't get 5-1 or 7-1 ARM. ARM represents adjustable rate mortgage, which means the rate changes after 5 or 7 years, or even any commercial loan. For the case of commercial loan, although you get 30 years amortized payment for a month, but there is a balloon payment after 5 years. So basically you need to refinance the whole mortgage after each 5 years. I want to avoid all this kind of 5-1, 7-1 ARM or commercial loan for my rental portfolio. I learned the lesson in a hard way because when I invested apartment syndication and they got commercial loan, they could not able to refinance when the interest rate rose to almost 7%. And step number 5, hold indefinitely. I follow the same principle what Warren Buffett follows for stocks or businesses. He never wants to sell his business. For in case my rental portfolio, I don't want to sell any of my property. I only buy them if I can hold them forever. One easy way to figure out if all the expenses are covered by the income and you get some sort of money, at least $100 to $200 each property after each month. Keep in mind, I don't sell my property, I don't time the market, I don't guess where the price will go next year. I just focus on the cash flow. And if I get any appreciation, that is a bonus for me. Now you might ask, which properties should you buy? Let me show you some examples. For this buy and hold strategy, I always focus on single family homes because of the following reasons. And you will see I learned all these lessons after 10 years of experience. The main reasons are single family homes are easier to rent. I need only one person or one family to rent out the whole unit. These units are easier to finance. I can get 30 years fixed rate mortgage conventional loan or DSCR loan, and in that case I pay the same amount each month for the next 30 years. Single family homes are easier to sell if I need the liquidity. The main reason behind it, because all the single family homes are independent. If I need to sell one property in one state, it doesn't impact any other tenant or any other houses in the portfolio. Most tenants stay longer for the case of single family homes because they don't share an apartment or townhouse like duplex, triplex or fourplex. Most of the cases when you buy multiplex unit, there will be a multiple tenants in the same property. And the last reason, the risk is manageable. One house doesn't depend on the other houses in the portfolio. And most importantly, the income assets are diversified in different states of USA and also in different geographical locations. Now you know how to source your first rental property. You will need to know how to build up your portfolio. Here is the exact way how I scaled up my portfolio to 22 units. Some people ask me, how did I get there? Well, I didn't buy 22 units all at once. These happened over 9 years. I got my first rental property in 2017. I reinvested the cash flow, bought another rental property in 2018. I started looking for rental properties outside of my backyard, basically different states. In 2018, I bought 6 rental properties in Ohio, where the price ranges were something like $20,000 to $40,000. I refinanced my portfolio strategically. What that means, when the interest rate dropped below 3%, I refinanced 4 of my properties during the pandemic and used all this cash flow to buy the next one. And I repeat this system over and over again. One more interesting thing I did, I used 1031 exchange to transfer one of my house to 6 more houses in 2021, and I did another 1031 exchange in 2024 where I exchanged one property to 8 different properties. It's amazing that you can 1031 exchange from 2 properties to 14 properties. You see, there is no viral hacks, no overnight success, just stacking boring wins one after another. Sure, this strategy isn't flashy, but it's reliable, and reliability beats excitement every time. It just requires industry knowledge and a strong understanding of financing and leverage. And it's exactly I teach in my entrepreneurship mastermind, where I help professionals to build diversified portfolio income streams in 3 months without quitting their jobs. If you are ready to stop relying on one income and start building real wealth, check the link in the description below to learn more. Thanks for watching. I will see you in the next video.